Business in the Okanagan matters. This is Law Talk with lawyers Clay Williams and Tanvir Gill from FH&P Lawyers LLP. They talk business and take your questions at podcast@fhplawyers.com. Now, here's Clay Williams.
Welcome to another edition of FH&P Lawyers Law Talk. I'm Clay Williams. I'm a partner here at FH&P, and with me, my usual sidekick is Tanvir Gill. Welcome, Tanvir.
Thanks, Clay.
And so we've got a special guest today, Nancy Ling. Nancy is also a partner at FH&P and practices primarily in the fields of business acquisitions, real estate, and estate law. Is that right?
Correct, yeah.
You've been around a while now, haven't you?
I guess it's about 10 years now.
Okay.
Not as long as Clay.
Well,
Not quite as long as
but
Clay.
At least I've remembered your name now.
There you go.
So that's great. And
Practice makes perfect.
Practice makes perfect.
You're not a first-time guest on our show, are you?
No.
You've been on our show before.
Yeah.
That's true. That's true. You're actually kind of a repeat offender here, aren't you?
There you go. Do I get a special jacket or anything?
Yeah, we'll get you a pin later. Okay, so our topic today is this Canadian mortgage charter that we've been hearing about from our federal government. And, well, I don't know, why don't you start us up, Nancy? What the heck is this Canadian mortgage charter, and where did we hear about it?
Yeah, I mean, that's a good question. Basically, in the 2023 Fall Economic Statement, our federal government announced this new Canadian mortgage charter. And you're exactly right. Everyone was like, well, what does that mean? So basically, it's the federal government has written a public open letter to banks asking them to be nice to vulnerable borrowers in this harsh economic environment. So basically what they've done is they set out guidelines that they are asking banks to follow when dealing with vulnerable borrowers. So outlining basically 6 things. Asking banks that they would allow temporary extensions for amortization periods, waiving fees and costs, things like that as a relief measure. Not requiring insured mortgage holders to re-qualify, so repass the stress test when refinancing or switching lenders. Reaching out to borrowers 4 to 6 months before their maturity date, so asking them to contact the borrowers a little earlier. Giving homeowners the ability to make larger lump sum payments, so basically asking the banks to waive prepayment penalties, and not charging interest on interest in the event that the borrowers can't make payments, things like that. Basically, they announced the same sort of guidelines back in July. The only 2 new ones they added in the fall were asking the lenders to waive the prepayment penalties and asking the lenders not to subject borrowers to the stress test again when switching lenders or refinancing.
So I got some pretty qualified language from you there.
Yeah.
This asking, and so I remember. Pretty sure I saw it on TV, and our deputy prime minister was announcing it, and I got the feeling it was there to help people that have mortgages in the face of these interest rates and on renewals and with inflation. And what do you does it have the force of law? Is it going to do anything?
No.
It's
That's
got no
the biggest
teeth.
thing, yeah.
It's not a law.
So a lot of people think this is a new law coming into effect, and they're so confused, and they think there's going to be some type of legislation to follow up with it, but it's not. It's just, we'd like you to do this.
Yeah, that's it in a nutshell. It's not a law. It's entirely voluntary. There's no enforcement measures, meaning it's got no teeth. I read a bunch of opinion pieces before today's meeting just to see, what are the mortgage brokers saying about
They're
this?
all
What are people
pretty
saying?
pissed,
It's been called nonsense, political theater,
Yeah.
silly. Basically, you're asking lenders and the people that invest into mortgages to waive prepayment penalties. You're asking them to waive the profit they would have made on the mortgage.
Yeah.
Why would they voluntarily do that? Why would a bank want to re-lend money to someone who cannot pass the stress test?
Yeah.
And again, if the banks aren't very kindly following these requests of the federal government, it's basically going to be monitored by the Financial Consumer Agency of Canada And the borrower's recourses, or the vulnerable borrower's recourses, if the banks kindly say no, is going to be basically just to go online and submit a complaint to the Financial Consumer Agency.
Yeah, but how can they actually do anything about it if it's not law?
If there's
It's
no teeth.
it's a political ask.
I mean, they might, the FCAC, the Financial Consumer Agency of Canada, will collect this information, and once they've collected a bunch of information about, complaints and which banks are complying, they may make a policy decision, but that's all speculation. This, on its own, the Canadian Mortgage Charter, is basically just a list of very kind requests. Dear banks, please be nice to borrowers.
So it is political theater at the end of the day, it seems.
That's my sense. It doesn't have any teeth. So what,
Seems like, yeah.
I mean, coming from lawyers in the legal perspective, if you put a rule in place, our first question is, well, what happens if somebody breaks that rule?
Clearly nothing here.
Right.
It's not a rule.
Well, let's do a little bit of a deeper dive. You mentioned there's two new provisions. The first is not requiring insured mortgage holders to re-qualify under the insured minimum qualifying rate when switching lenders at mortgage renewal.
Yeah.
So let me just back it up here. So people in Canada, most people take a 5-year term, and at the end of the term, they usually will get in the mail a renewal form, and they may either sign that, and that'll be, these are the terms that we will renew, or they can go and see if they can shop and get a better rate. And so the first one there is, not requiring insured mortgage holders to re-qualify. Okay, that's interesting to me. So first of all, an insured means CMHC?
Yeah, so basically they don't have the 20% down payment. So it's a high ratio mortgage. They've got the default insurance in place, and now it's time to renew. And so normally when you're applying for a new mortgage product, they add a couple of points to your interest rate to see if the interest rate went up by, I think, 2.5 or something like that. Would you still be able to manage your
Yeah.
payments? And if you pass the stress test, then they'll give you the loan. So they're asking the banks not to apply the stress test.
No, if you qualified once 5 years ago under the insured mortgage, you don't have to pass the test again.
Okay, well, that if the banks would do that, I guess that would give people a little more choice.
Yeah.
It's just that the banks don't have to do that.
I mean, the banks, in my opinion, maybe I'm not being optimistic enough, but in my opinion, if a bank's got two borrowers, one who they know can service the debt and one that they know can't pass the stress test, where are they going to place their investors' money? Because that's what it is. The banks get investments and they loan that money out to their clients as mortgages.
Yeah,
With
and
an
I know
expected
it's
return.
only for insured mortgages anyway. So
Mm-hmm.
for those people who put more than 20% down, it's that doesn't.
I wouldn't consider those people most likely to be vulnerable
Risky,
borrowers because they have that much of a down payment.
Well, what about the next one? Contacting homeowners 4 to 6 months in advance to of their mortgage renewal to inform of their renewal options.
I mean, I'm
struggling
not sure.
with that. What do you get out of that?
I'm not sure I see a benefit there. On the one hand, if people are disorganized and they don't realize how much financial trouble they're in, it gives them more time to come to terms with the reality of their situation. But otherwise, you're just asking them to pull the trigger on an interest rate a few months earlier than they normally would. And I mean, we are in an economy of hesitation right now. So if I had the option of committing to an interest rate right now or in 3 or 4 months, I would probably wait 3 or 4 months to see if anything changes.
Yeah.
Mind you, if I'm literally hanging off the edge by my fingernails and I need to figure something out now, maybe it would be helpful to look at my options earlier. But if things are that bad, maybe the options aren't that great either.
So at the end of the day, it doesn't sound like there's much to this. So unfortunately, so
Yeah, again, I think we've seen this a lot with the affordable housing crisis and the interest rates rising and the economy. The government keeps rushing out these policies and these news releases to sort of make Canadians feel better and feel that the government is doing something.
Yeah.
Some of the laws and bills that they push through are doing things, but this isn't a law. It's a suggestion.
So if you're going to lose your house because you can't afford the new mortgage rate, the Canadian Mortgage Charter is not going to help you.
Well, what you'll do is you will ask the lender to grant you relief, to not charge you the interest on interest, to not charge you a prepayment penalty. You'll ask them to waive all of that stuff, and if the bank says no, then you're going to go online to the FCAC and file a complaint.
All right. So thank you for appearing today, and I'm sure we'll have you back as you are a regular here at our show. So
I'll be anxiously waiting for the invite.
FH&P Lawyers are rooted in community and ready to help. Send your business law questions to podcast@fhplawyers.com.